A near record year for the stock market. Housing starts way up. We're looking at consumer confidence way up. We've got a lot of great things that happened in the last quarter of 2019. I have to say, we're going to be sad to see it go, but stick with me here for the next few minutes as I talk about in detail what happened and what we see coming for 2020. Hi, I'm Dean Barber, founder and CEO of Barber Financial Group. Happy New Year to everyone. Like I said, 2019 turned out to be a fabulous year. We're going to go through some details on what happened during 2019. Obviously, it wasn't a straight line. If you fell asleep on January 1st, woke up on December 31st, and you look at where the major indices are, you'd say, wow, that was an incredible year. It wasn't without some turmoil throughout the year. So let's review that real quick. I want to go back here on this chart and just show you the last 6 months of the markets. And you can see that in the markets we had in the last 6 months, anywhere from, say, a positive 5% to a positive 10%, depending upon which index you're looking at. But if we narrow that down into a 3-month time frame, what we get is now gains anywhere from almost 12.5% to a low of about 7%, which means that there was still a little bit of pain recovering from that second quarter. Remember, the third quarter was the only quarter for the entire year where we actually wound up with negative returns overall. So best quarters, obviously, for the full year, the first quarter and the fourth quarter. Now, how did all this happen? We looked at what was going on early in the year. We wound up with an inversion on the yield curve that was spelling recession. The yield curve has lost the inversion. We now have the 10-year yielding higher than all the way down to the 1 month. The question becomes, is that the end of it? Does that mean that a recession's not on the horizon? You know, if we look at the economy as a whole, I could say that the economy today looks as strong as it did going all the way back into the 1950s. It looks as healthy as I've seen it in the last 30 years of my time in this industry. But that doesn't mean that everything just continues to do extremely well. I do think that as we roll into 2020, corporate profits are going to continue to go up. I think we're going to see consumer spending continue to rise. I think we'll see GDP touching that 3% mark in 2020. Housing starts just this last month recorded their best start in 12 and a half years. And that's pre-Great Recession. So a lot of great things going on. And we still have that 10-year treasury down below 1.9%. So money is still extremely cheap. We also have Jerome Powell virtually sitting on the sidelines saying, hey, I don't see really any need to do anything. And if you'll recall, in the fourth quarter of 2018, it was Jerome Powell's comments about him thinking that he was going to have to raise rates 4 times in 2019 because he thought the economy was heating up. Well, what happened was exactly the opposite. He wound up lowering rates 3 times as opposed to raising rates 4 times. And that is what helped give the market a big boost in 2019. And with Jerome Powell sitting on the sidelines now, with very little threat of inflation on the horizon, corporate profits look great, housing starts look great, consumer confidence is high, that could bode well for a good 2020. Plus, it's an election year, and the incumbent is running for re-election, obviously, and so that could bode well for the markets looking higher. I want to show you something back on this chart as we look at the what we call this power bar here. So if we look at the NASDAQ 100, you can see that there's 24 stocks that are in what's called green. That's bullish. 64 are neutral, and only 11 are bearish. And you can run down to the Russell 2000, S&P 100, etc., all the way down here, and you're going to see more bullish than bearish stocks in just about every single one of these different indexes. That's a good sign rolling into 2020. I want to remind you, though, that something could take place here in January. A lot of people saw their portfolios get out of whack as far as the asset allocation goes. Maybe there's more equity exposure now in the portfolio than what there should be. There could be a lot of rebalancing going on in January. That could spark a little bit of selling. So I expect to see a little bit more volatility here in January than what we saw over the last quarter. You know, kind of hang in there with that. I don't see anything on the horizon that is going to be something that I would say gosh, we got to make some major changes. What I would suggest, though, is that everybody really step back and speak with your advisor here at Barber Financial Group, and let's understand what your allocation is today, how it has changed over the course of the last 6 or 7 months, and make sure that we don't need to do some rebalancing. We obviously, we're kind of taking care of that on our end, but it's really good for you to make sure that you're fully engaged with your advisors here at Barber Financial Group, and that we get all that done. Now, one thing happened in December, and that is Congress pushing through something called the Secure Act. We're going to be talking about that on America's Wealth Management Show. We're going to be putting some seminars together for it. But essentially what it did was it killed the stretch IRA. So all of you that have significant money in your IRA accounts, when that money passes to the next generation, your children, your grandchildren will no longer be able to stretch that out over their lifetime. It's going to be forced out over a 10-year period. That could cause some enormous erosion from excess taxation. We're working on strategies to try to help you manage that, and some things that I think that will actually put us in a better position overall. Anytime we have a big legislation change like this that affects such a large portion of somebody's retirement, it is going to require some deep discussions with each and every one of you as far as the money that you have in your retirement accounts and how you want to pass that down. 2019, we're sad to see it go. 2020, I expect a little bit of a rocky start, but I think if things can hold together in the economy, I think we continue to get future trade deals done with China, and that continues to move forward. It's going to be an election year. A lot of fireworks going to be going off out there. Let's hope January isn't as bumpy as what I anticipate. I'll catch up with you here the first part of February, let you know what my thoughts are then. Until then, please make sure you're keeping us informed of anything that's going on in your life, any changes that are happening, and make sure that we're getting that updated in your overall retirement plan. And another thing that I want you to do is I want you to make sure that you subscribe on our YouTube channel. Every time I do a video, you'll get an update, and it'll say, hey, there's a new video out there from Barber Financial Group. So subscribe to that on our YouTube channel, and be on the lookout for the Guided Retirement Show, Season 2. Episode 1 coming out January the 7th, and you're not going to want to miss any of these episodes that we got coming up in Season 2. There's some really exciting conversations that I'm having with some unbelievable guests. I can't wait to see all of you, and again, Happy New Year, and let's look for a prosperous 2020. All of our YouTube viewers, thank you so much for viewing. I hope you really enjoyed this video. If you like it, share it with your friends. Go ahead and like it on the page, and make sure to subscribe.